You know, every single day, the financial markets get slammed with this tidal wave of news. And for most people, it's just noise. But for a disciplined day trader, it's actually a roadmap. In this explainer, we're going to show you exactly how to read that map.
All right, let's kick things off with the absolute #1 principle. Forget just looking at charts and patterns for a second. The pros, they'll tell you straight up, to really make it as a day trader, you have to become a master at reading, understanding, and most importantly, reacting to the news.
But that's the real trick, isn't it? With all that information flying around, how do you even begin? So in this explainer, we're going to give you a simple but really effective framework to turn all that financial news from just overwhelming noise into a clear, actionable signal.
Okay, first things first. Let's really nail down why understanding the news isn't just, a nice-to-have skill. It is the absolute foundation, the very backbone of a disciplined trading approach.
Look, it really boils down to this one key difference. Profitable traders, they work from a position of knowing. They are proactive. They know what news is scheduled. They know how to interpret it. Unprofitable traders, on the other hand, are stuck in a state of wanting. They're just reactive, they're guessing, they're hoping the market will just happen to go their way.
So the big question is, how do you make that jump from wanting to knowing? Well, it all starts with having the right tools. And honestly, you only need 2 websites that are going to be the foundation for this whole thing.
That's it. These 2 sites are your entire arsenal. Think of Forex Factory as your appointment book for all the big scheduled economic reports. And MarketWatch, that's your breaking news feed, your radar for all the unexpected stuff that can move the markets out of the blue.
All right, let's zoom in on Forex Factory for a minute. You got to think of its economic calendar as your mission control dashboard. So we're going to break down the 4 key parts you need to know to read it like a pro, at a glance.
Okay, when you pull up that calendar, the first thing you look at is time. And it's the most important thing on there, period. If you don't know when the news is hitting, literally nothing else matters. Next up, you've got the impact rating. You'll see it's color-coded. Now here's a little secret, a real pro tip. Don't get hypnotized by the red, high-impact news. You need to treat every report seriously, because sometimes it's those little yellow folder reports that can sneak up and cause the most chaos.
And then, of course, there's the news column itself. This just tells you the name of what's coming out, GDP, jobs claims, or maybe a big FOMC statement on interest rates. And trust me, over time, you'll start to learn the unique personality of each of these reports.
And last but definitely not least, we have the forecast section. This is where you see all the numbers. But here's the thing. The real magic isn't just seeing the data pop up. It's all about how you interpret it.
And that right there brings us to the most important skill of all, the real art. It's not just about reading the data on the screen. It's about understanding what those numbers really mean for where the market is headed.
Okay, listen up, because this is the single biggest mistake that almost every new trader makes. Amateurs, they look at the actual number and compare it to the forecast. They see a green number, they think buy. A red number, they think sell. Professionals, they completely ignore the forecast. Why? Because a forecast is just an educated guess, that's all. What they do is compare the actual number to the previous month's number. That's how you see the real underlying trend.
And the great thing is, the site makes this super easy. They give you these little bar charts, so all you have to do is compare this month's blue bar to last month's blue bar. Is the economy actually getting stronger or weaker? That's the only question that matters.
All right, so we've got the knowledge part down. Now let's talk about turning that into a disciplined daily routine. It's time to lay out some hard and fast rules of engagement.
Okay, this is your morning checklist. It's a non-negotiable ritual you do every single day, before you even dream of placing a trade. Step 1, read the news, know what's on the schedule. Step 2, find the range and base for the day. And Step 3, identify the market's overall trend.
Okay, if you walk away with only one thing from this entire explainer, let it be this. This is the golden rule, engraved in stone. Never, ever, ever be in the market when major news is about to drop. Think of it like a hurricane warning. You don't try to trade the hurricane, right? You find shelter. Get out of the market and stay out for at least 10, maybe 15 minutes until the storm passes and the chaos dies down.
So, what's our daily goal then? Are we trying to hit a grand slam? Absolutely not. According to the pros, your only target to build consistency is just 2 points of profit. That's it, 2 points.
And I love this quote. It just says it all. Anything above 2 is your bonus. That's your gravy. That's not your target. See, that psychology is everything.
It keeps you consistent, and it stops that little voice of greed from convincing you to do something stupid that'll blow up your account. Okay, last piece of the puzzle. How do you actually put on a trade that lines up with what the market is doing? Well, we can actually boil it all down to a super simple 3-step algorithm.
You know, the market doesn't just go straight up or straight down. It breathes. It pushes forward, and then it pulls back. So your job is simple. First, you spot the big, strong push. We'll call that the swing. Then you have to be patient and wait for a smaller pullback. That's the retrace. And only then do you enter a trade going in the same direction as that original powerful swing.
So that really brings us full circle to this final thought. If the news is the engine driving the car, and the chart is just the GPS telling you where you are, who's really in charge? Is it the trader who's always trying to predict the future, or is it the one who simply has a system to react to what's happening? This whole framework, it's not about being a fortune teller. It's about having a disciplined process so you can stop guessing and start reacting intelligently to what the market is giving you right here.